where there are produced and demanded real goods and services. And if this, or parts of this money are drawn out here of this circulation, this has big consequences. Let's discuss it on an extreme example so that a big part of this demand doesn't happen because the money is flowing out of the real economy. What are the consequences? The demand in total is diminishing, so the money which is flowing to the enterprises and companies, the sales volume in average is going down, and then it just happens what I already painted with this, with this individual over the surface of the water, over the head under the water. So on a level, aggregated level of economy, this will lead to reduce the prices here. If the quantity of what is produced is in the short run not to be changed, then the prices have to be changed. And they have to go down. And this is called deflation. Deflation. And one could think this is a fine thing. Things become cheaper and cheaper. But for the producers, it is not a fine thing because they now with their head come below the surface of the water. They will, go down. And also the employment will break down. So the employees, the laborers, they are pushed out, blown out of this context. One can imagine as if this were some, as we know it from a technical machine, steam machine. So this means unemployment. Unemployment, or this is the labor which is thrown out and blown out of this production process. They lose their employment. They lose also the wages. And okay, in some countries there's a social system which takes a part of this loss and compensates it with some social policy, but there are also many countries where nothing of this kind exists. And so this unemployment will in the next run reduce the national income, first the income of the former laborers. Then in the next round this is reduced, and this is reduced, and this is growing, and this is growing, and this is growing. And from round to round it goes into this direction, so we can imagine like a tool, yeah? Eine Zange, what's the name? Everybody sees what.
Scissors? Or cutter?
That's Zange. Yeah, with big arms. So there is a big importance on this question: does this saving, does this surplus money keep in this circulation, or is there some kind of a hole? And Silvio Gesell said, in the capitalistic system, there exists a tendency that more and more of the former circulating money here is drawn out and flown out of the real economy. Why? He said on the long run it is impossible to keep the profits and on average on a level which is enough interesting and which is also enough able to pay interest for the creditors. So it will become more and more difficult to sell the products, and even in the world market. It will become more and more difficult to take more and more resources because they are not unlimited usually. So they become more and more scarce and more expensive. So from two sides it will diminish the average profit rate. And this profit rate must not go down until zero to be uninteresting, but also on a higher level. It begins for those who keep the money, who keep the so-called liquidity, the money which is surplus over the consuming demand. For those, it is more and more uninteresting to put and invest their money into an economy and into companies or into credits for those companies and so on. If this is only a very small, a very low level. Because to hold the money liquid, this is an expression of Keynes 20 years after Silvio-Gesell. He called it liquidity, and some or many may prefer to keep this money liquid in order to have it available for some opportunities which may develop in future. Only this possibility to take an opportunity, for example, to speculate with this money, is worth enough to hold this money back and not giving it for a low interest rate or a low profit rate into this real economy. So this money not only keeps in a situation where it is hold and stagnant, but it is starting from here in quite different spheres, which I symbolize this way. This is what we call the international financial markets. And I do not mean those aspects of the financial market who really finance investments in the real economy. This is also a part. For example, if a company makes an emission of stocks, then those who buy the stock give the money to the company, and the company can invest it. This is a part of real economy. But now there's a stockholder and a shareholder of this company, and this shareholder will not necessarily hold this stock for years or even for decades sometimes. It was in former times, so they identified with the company, railway company for example, and they were proud that they were shareholders of a company. But this kind of attitude has changed dramatically, especially because many of those who buy stocks of companies are not individuals. These are investment companies. And they are not at all sentimental in relation to the company. They only focus on the profit, on the revenue which is flowing out of this financial investment. So a big part of what is happening at the financial markets